Break down today's market action with Samir Samana of Wells Fargo Investment Institute and Christina Cooper of Invesco. It's great to have you both here. Basically a mixed session to start this first full week of the new year. But Christina, I'm going to start with you because we did have the S&P finish up about 0.5% here. The Nasdaq more than 1%. I know Nvidia has been flirting with a record close ahead of that CES keynote too. What are you watching in this new year, especially after such a strong 2024?
Well, I'm watching to make sure that the factors that made 2024 successful are still in place. And we certainly have some of those factors. We have supportive central banks that are likely to continue easing. We certainly have the potential for improvement in earnings because I think we will see a reacceleration in the economy. But we do have to worry about the risks. The risks to me are twofold. One is the potential for the economy to falter. We've seen some small cracks form, but those could worsen. I mean, let's face it, monetary policy tightening was very aggressive. We never really did see a significant impact. Are we going to avoid it? Probably. But I think there is that small chance that it's just late to come and that we could see greater cracks form this year. The other issue, of course, is the potential for a resurgence in inflation and what that can do in terms of changing monetary policy, which is part of what has made this environment so supportive for risk assets.
And certainly it's something to watch, Samir, as we have seen the 10-year Treasury yields flirting with key technical levels and highs of last year. Want to get your thoughts on the setup here for 2025, especially after a failed Santa Claus rally. And I realize you can argue how much stock to put into that after the strong gains of last year, but also given the fact that it really has been in many ways the U.S. versus everything else, whether that's a trade that continues.
Sure. So I would say at a high level, look, we do think there's more room to run. Our year-end target is 6,600 for the S&P. So that's about, 11, 12%, total return, especially given kind of today's modest session. So I do think there are more gains. Now, that being said, with the 10-year having crept up here to kind of 4.5, 4.6%, the gains from here probably come by a little bit, more in a more difficult way, right? You're probably going to see a little bit more chop. Today showed you that, especially with rates up here, you're going to have very narrow leadership. You had small caps, a lot of the rate sensitives have a very difficult day. You had China down yet again, right? So for everybody hoping that there's going to be some additional, source of, kind of stimulus from the Chinese, they're still kind of going it very slow. So I think you do lean into, some of these trades that have been in place for some time, because I think that's where the earnings growth is.
Not such a tough day for Nvidia, though. It does close 149.43, I believe, above that 148.88 level. That would have been a record level. So, Christina, that makes me wonder. Nvidia was the big name last year, and mega caps really led things. Should investors be looking outside of those big domestic stocks for growth, for diversification in 2025, and then particularly internationally? How would you do that?
So absolutely, they should be looking outside the mega caps because you want to diversify even just in valuation terms. And there are far more attractive valuations if you look in the small and mid cap space. I also think they're likely to benefit the most if we do see that economic reacceleration. They're more sensitive to the economy. We could also see the same come from cyclicals, which also, by the way, are lower valuations. Now, when you go outside the U.S., I think there's certainly a lot of potential there. And you just have to keep in mind that the economy doesn't have to look great for markets to look attractive. And so, for example, the UK, to me, stock market looks very attractive right now. Valuations are low. Dividend yield is high. Buyback yield is high. That's an environment where we could see some strong individual players, especially those with more global exposure, do very well. So I think it's about being actively managed to a certain extent outside the U.S. Be selective. There are a lot of opportunities.